Is this background better or the one with the logo?
Lagos, you are welcome to Personal Finance here on a Wednesday evening. Yes, today's the 18th day in June 2025. I was going to say 2026, but I'm like, okay, calm down. We can't be in a rush like that just yet. People have not done their Christmas. So I understand. I will calm down. It is still 2025, and yes, you tuned into Personal Finance. My name is Joy Ray, and on Personal Finance today, we'll be talking about or taking a look at the regulatory bodies and investing in Nigerian bank stocks. My guest who is joining me virtually is Oluwayemisi Sunmola. He is the banking research analyst at Vetiva Capital Management. Good evening. I'm glad to have you with me.
Good evening. I'm glad to be here also.
I did better than you thought. I saw the smile when I said the name. Okay. All
You
right,
did well.
Lagos. As always, you get to share in on the conversation, share your thoughts as all you can come through on WhatsApp. The number hasn't changed. 0809 4440981. Love to hear from you, your thoughts on regulations. And hey, have you been thinking of investments? How to go about it and all that good stuff? Well, Oluwayemisi will be sharing thoughts on the things you need to know, especially as we're always looking at diversifying, sorry, portfolio and the things we need to put into proper cognizance. And let's even start from the ground. What exactly, first off, is regulatory forbearance within the Nigerian context? What does that even mean before we start thinking of what the getting into all the investments and banking sector, what all that means for them?
Okay. Let me just break it down in layman terms. So these regulatory forbearance loans were kind of like an allowance of sorts that the CBN gave the banks as regards the loans they gave out during the COVID pandemic, right? So the
Okay.
banks had some of these loan books where a lot of the people they had given loans to were not able to meet up with their obligations, right? And
Mhm.
those were on businesses that would directly be impacted by the COVID pandemic. So the the CBN basically said that these banks were allowed to classify these loans under um, we are allowed to classify these loans separately and not actually record them as bad loans, right? So now what the CBN has come out to say now is, okay, I think you guys need to go back and clear your books. COVID
Mhm.
is ending. We are going undergoing some banking recapitalization. So now go and
Okay.
clear your books. And to make you actually do this, okay, stop dividends, right? Stop dividends,
Oh,
do not pay any allowances to your top and stop any external expansion, right?
all
So
right.
basically forcing the hands of this bank. So that was
Oh,
basically what happened.
now that sounds scary. The central bank isn't playing. And I know
Yeah.
that they issued this directive on Friday last week, if my memory serves me right, that banks under the regulatory forbearance should stop paying dividends and bonuses. Now that you explain that, it's just but why, right? Really? Why? Why are you asking us to stop what it's working? It, I know you're saying, shuffle your house, make it balanced in a
So
sense. But
so
why are you asking us cut off from the top? Like,
Yeah, so
seems
basically what
scary.
has happened was that okay, they allowed the banks kind of make their books, not classify these loans as bad loans, or
Okay.
they just basically let them continue the business. But now they are like, okay, um, we should meet global standards, right? We should meet
Right.
global standards in regulation and the like. So clean up your books, right?
Hmm.
If these are bad loans, let's know that
Let's
they are
know that
bad
that's what
loans.
it is.
If they are, and make provisions for them, right?
Okay.
Basically clean up your books. So we have even seen the banks actually come out. A lot of banks have come out. The likes of Zenith Bank. Zenith Bank has said that before the 30th of June, that
Hmm.
they would actually make enough provisions to cover up for these loans. Even the
Okay.
likes of Access Corp has came out today and said that by June, that month end. So we are
Good one
seeing the
then.
banks actually act swiftly. Even
Okay.
the likes of FCMB came out and said that so in terms of dividends, about 46% of their dividends don't even come from their banking subsidiaries, come from non-banking subsidiaries. So they do not expect that
Nice.
it would affect their dividends payment. So what we basically just saw was with Nigerians, a knee-jerk reaction immediately. Nobody, when people panic, they exit their positions, right? So
Okay.
So there
Okay.
was a panic generally. So we saw people exit their positions, pulling out their money. But now with more light, um,
Right.
we've seen people move back into the market. So we saw a rally today,
Okay.
majorly around the banking stocks.
Okay. Now, like I said, it was scary when I saw it, and I was like, okay, should people be scared? Because anything that it touches people's dividends, their monies, they're like, you know what, pulling out, keeping all my funds, and that's very scary. Not having this information upfront, especially, I know, yes, we want to keep certain things guarded. It's expected. You can't share all the information, but with the stakeholders not knowing what exactly is going on, it just makes it more scary that is it that that bank is about to close up shop?
No, no,
Because that's the news that's been spread. Oh, it seems some banks are about to be taking over and all that. So bad news spreads faster than anything, and not knowing
yeah.
how to nip things in the board could just go out of hand. So, but yeah, go ahead. You wanted to
Yes.
share more
So
insights.
that's another reason why it's quite important for you to have information on the market, right? We all know that the CBN already gave a directive that most of
Right.
these international banks should actually show up their capital base, right? So the banks are currently are very liquid, right? They have the
Hmm.
cash. So now they are like, okay, ensure that everything is in check. So that was what the CBN, because even the CBN came out and said they are quite optimistic about the resilience of the banking sector. And when they saw the panic of a lot of the panic from the investors, they
Hmm.
said, okay, they kind of sent out another circular. Oh, wait. It's not that deep, right? It's not that deep.
Oh
It's not
no, they're
that
not waiting to find out. Plug all the
exactly,
holes first.
exactly. And say apart from the likes of Zenith has already met up with their minimum capital requirement. Access has already
Okay.
met up, so we know there is liquidity, right?
Mm.
And it won't even be in the best interest of the other banks not to pay dividends because one, you are trying to show up your capital.
Right.
You are trying to show up your capital. So you are now telling current investors that they won't get dividends on their current. So it won't even play good for a lot of these. It won't be a good
It
look.
won't
So
give image at all,
it won't be a good
especially
look.
as you're trying to, bring them over to your side, and then all of a sudden they've been hearing all this great stuff happening with you. Oh, so and so
Exactly.
bank is doing this. Buy into our vision, more or less. That's what it is basically. And then you now all of a sudden start hearing, sorry, we cannot pay you. Hey,
Exactly.
hey, just
Uh, uh, and like we said, the banks being very competitive just
yeah,
came in
yes.
and said releasing disclaimers immediately. They released a lot of disclaimers. No,
Right.
it's and we've actually seen them actually take a lot of proactive measures to actually can to salvage the situation. Hence the rally we saw today,
Right.
majorly driven by the banking sector. So the banking sector is still one good sector to look at, especially case in point being the fact that the current government is trying to bring Nigeria into a $3 trillion economy, and the banking
Right.
sector actually has a huge role to play. So it's in both the benefit of the government as well as these banks, for the banks to actually do well in the near term.
Mm.
Right.
And that makes me wonder because as at Monday, like I said, there's been some scrambling happening in the background. Monday and some earlier hours of Tuesday. I'm not sure by yesterday evening if things had been better, but like you said, there's been a rally today. But most bank stocks fell as at Monday and early hours of Tuesday. But two banks stood out. That's GTCO and Stanbic IBTC. I'm just wondering, how were they able to escape that? Is it that they were not exposed to the forbearance microscope, or had they been doing things behind the scenes before now?
Yeah, so these banks were the only banks actually not among the forbearance. So they had cleaned their books already, right?
Okay,
So hence
interesting.
the stability we saw in those banks. So
Okay.
um, they were quite forward thinking. In order, especially the likes of Jitco, I think they paid the last of their loans as at last year. So their books were
Okay.
completely clean.
Mm,
Hence,
mm.
they actually being the banks that were in the green.
Smart. Well, hey, there's who know how to maneuver and they know where they're trying to, improve on their strategies, I guess. Like you said, that's why we had the whole rally today, and we're seeing how it's been profitable. If not, a lot of people would have, moved shape, and some banks wouldn't be willing to have that happen to them right now. So smart one indeed for those who were able to sort things out way before now. So big ups to them. But that makes me wonder now that how do I even put this? Have their stocks recovered? Because I haven't checked. So some they've recovered, but I'm wondering, is the worst over? Because some of their stocks went down as I yesterday. When I checked last, it wasn't looking so great for some of them, but it seems like some of them have recovered. They started picking up, but really, is the worst over? Or
Yeah,
should
so
we
I've
still be looking at certain
for
things?
um in line with a lot of our expectations, we already expected that in the short term,
Right.
particularly in the Monday trading session, we would see an immediate reaction by the market. We kind of expected
Expected
it
that,
based
yeah.
off the historical movement of the market. One case in point, even give remember last year, some time ago when when the government came out to say, okay, do not pay dividends on your FX revaluation gains, we saw the
Mm,
market immediately react to that news, but it was short lived. So the same
right.
thing we expected again this time, that whatever would happen would be short lived. And that also posed some sort of positive for a lot of these long-term investors to actually come in to pick up these stocks at lower prices. So while
Right.
another person is losing, another person is gaining, right?
Smiling.
That's the market.
I like see that's but that also boils down to having the right managers because if they are on ground, putting their ears to the ground, they'll be able to make sure that your portfolio is, bulky enough and you'll be smiling literally to the bank and depends on the bank fact.
Exactly. So you can trust
Oh,
Vetiva fund managers to
also,
actually be the best.
see, I'm not even going to mention, but okay, thank you for plugging that in. All right, Lagos, let's take a quick breather. On the other side, we'll be taking a look at how one should actually look at the markets because that's the thing. Certain people will say, "Oh, but I have access to the stock market every day. I could check things myself." But should you really be doing that now in 2025? Well, we'll talk about that and so much more on the other side of this quick breather. So, Lagos, don't move a muscle. Stay tuned here to Smooth 98.1. All about your finances made easy because financial education. Just a quick one, just a minute, and we're back in.
Okay, okay. Mhm.
5 years old. He's in trouble for acquiring a loan from her bank.
This no care at all. I've been on this queue forever, and you're saying I should fill another form. What's going on?
What can your bank do for you? Meet Frank, 27 years old, held up in traffic and making fruitless transactions.
Thank you, airtime. What the electricity charges? Like so people making it.
Introducing Safri, a lifestyle digital bank that's designed just for you. With one click, you can make easy and fast payment transactions, pay bills, and even acquire easy loans. Hurry and download the Safri app on your Play Store. Visit safrisafri.com for more information. Safri, borderless banking.
It's all about your finances made easy because financial education is about not what money, but personal finance on Smooth 98.1.
All right, Lagos, welcome back to the second half of Personal Finance here in Smooth 98.1. And as you know, we've been talking about the regulatory forbearance and the investing in Nigerian banking stocks. My guest this evening, still joining me and sharing his thoughts, is Oluwayemisi. Yeah, I don't know why she came to my mind, but Oluwayemisi Sunmola. He's the banking research analyst at Vetiva Capital Management, giving great insight, by the way. And if you were wondering how you can go about it, well, not to worry. I'll share his details on the other end of the well, when we're done with the program, then you can figure out how you want to, get in on all the good stuff while you still can. Well, here is something that I want to get in, and especially for those who are still new to how the market works. I'm looking at investing, looking at improving on my portfolio. Are banking stocks in Nigeria still a good pick for one to buy into or getting?
Okay. So the banking sector is one that is a very good sector to look at. Case in point, looking from a top-down approach from the macroeconomic level, we all know that the government is currently trying to grow the economy of Nigeria um, to bring it to a $1 trillion dollar economy, right? And case in point, the banks will play a huge part in that. Recently, we've also seen the profit levels of the banks highly driven by the high interest rate environment of the back of Nigeria's persistent inflation that we saw towards most of
Mm,
last year before the rebasing. So we saw that even feed into a lot of these banks' numbers. Even the likes of Fidelity did over 190% in PAT growth in just the first quarter of 2025 alone. So, and these banks are very, very resilient. So, if you're an investor that is thinking long term,
mm,
say in the next 1 to 5 years, the banking sector is one to look at. And another positive about the banks is that one thing about the banks, they are known for giving consistent dividends. So if you're an investor that is positioning for a lot of both dividends gain as well as capital appreciation, the banking
right.
sector is also one to look at. So the banking sector generally poses a significant level of long-term potentials, especially given even the recapitalization, which will buffer up their capital and make them more resilient on the long run. So the
Mhm.
banking sector would be one to look at.
Okay, that's good to know. Usually scared when you start hearing certain things on the outside, makes you more guarded. And anybody that mentions such thing, you'd be like, "Are you joking?" No, I'm protecting everything I own with all my life. So you never want to be caught off guard at any point in time. But thank you so much for clearing that up. Now that we've gotten there, what is the best or I don't know, would I say the best or the right approach before getting into the stock market. I want to build up. I've heard what you said right now. How do I go about it? That's basically what I'm trying to get at.
Okay, so if you want to invest in the stock market, the first thing you need to have is information. If you can't
Okay.
get that information, get it from
Mm,
somebody that has that information. Hence,
mhm,
you might require the need of a fund manager
mm,
or a stockbroking firm where they will give you recommendations on
right.
these stocks. But at the end of the day, the decision is yours. So it is also very advisable for you to also have some adequate knowledge on on these stocks generally,
Mhm,
wherever you want to invest, based off your knowledge as well as your risk appetite. Because if you are looking to invest if you are very risk adverse, so that means you would move more into the fixed income space, right?
mhm,
Doing a lot of, um, say, the treasury bills, or if you want
mhm.
to go to the corporate, the commercial papers. Those offer a lot of short-term instruments. If you're thinking long-term, you buy the bonds, right?
Right.
So just have, number one, know your risk appetite. Number two, have adequate information on what you want to, on
Get
wherever you
into.
want to invest, right?
Mhm,
Then have also employ the services of a trusted advisory house, a stockbroker,
mm, mm,
and
mm.
once you have those things in check, right? At least on a base level, I believe you're good to go.
That is very, very accurate. Because sometimes, you know how it is with certain individuals. They think, okay, just go search online and I can do this stuff. After all, the people who are doing it, they don't have 10 heads, right? And then you have certain platforms that make it look like, oh, it's just at the click of a button. And you you can get in, you can understand the stock market and how it works and all that. But really, do you have the time? Do you have the patience to monitor when it's going up, when it's going down, how you want to, if it's that right time to buy in on certain stocks and all that? That could be time consuming. And I've seen certain people who have tried to do that on their own initiative. And I'm like, you really do. You really have this heart of steel because yeah, I wouldn't want to be caught in that space, trying to monitor everything. My heart would just be in my hand. And I'm like, what if I do this and it doesn't pan out right? I will cry. And so you don't cry premium tears? Yes, Lagos. I'm sure you don't want to cry premium tears. You want to make sure that you're getting the right information and having the right people on top of things to help you maneuver how you want to, go around the market. And that makes me ask this question. Should one plan to be active in the market or just follow updates just so I know that yes, they have fund managers, but do you advise that one keeps up to date on what's happening, or since they have a fund manager, oh, okay, hey, just outsource it to him and or her and let the organization deal with everything. Do I need to even be kept abreast?
Yeah. So it's quite advisable for you to also do your own personal research. Although fund managers like Vetiva would actually cover a lot of these things for you. So you need not to be afraid, right, about things like that. But it's um also important for you to also boost your financial literacy. So
Right.
you so when your fund manager is speaking to you as to the rationale why he thinks you should hold a particular stock or you
Mm-hmm.
should hold a particular instrument, case in point, your risk level, you kind of understand where he's coming from, and you understand because the numbers never lie. The data never lies. So if you understand the data and you understand
Mm-hmm.
what we're speaking about, right, it makes our job way easier, right?
Okay.
So it's still important. Also, is the level at which you would have this information might vary. Case in point, the amount of free time you have, because we have some people who say someone
It's
that's
the
very
mm,
busy, you might not have as much time to always be on the market. But if you have a
right.
trusted fund manager and we are aware of your positions, we would say, okay, I think you've made enough on this, you can move into this. You've made enough on this, you can move into this. So that's why it's quite advisable for you to do your own personal research, but also employ the services of a trusted stockbroker or the financial services firm.
Hmm. All right, that is very helpful. And yeah, thank you for also highlighting that. It's good to know what the financial jargons mean because you should just, yes, it's good to have your fund manager putting things or making it work in the background, but you also need to be kept abreast, know what is happening. So if he's telling you, okay, go up, you know why, or suggesting why he's also done certain things to your favor. He's not just doing that blindly. He's also studied the market, or he knows firsthand what the market is looking like, and just putting you through in the best space for your risk appetite. Well, as they say, depending on your risk appetite, if you wanted to go up, hey, just do the one that you know works for you. So I know that the Nigerian Stock Exchange is around the numbers. I'm trying to get the numbers nice. Around 11% and 12% so far this year. What do you think the outlook will be for the second half of 2025?
So we are quite optimistic about the performance of um, the general equities market. We see expect some resilience in the second half,
Mm-hmm.
majorly driven by gains. We would see uh, that fed up from the beginning of the year. So we saw a rally in the banking sector towards January. Then we saw the consumer goods sector actually pick up the pace following a downturn in a lot of their FX losses they made previously. So we've been seeing the market largely driven by the consumer goods sector. The
Right,
telecom sector, the likes of MTN have also been rallying once
right.
Nigeria had. So the trajectory of the equities market is currently quite stable, given the fact that Nigeria's currency is also has some bits of stability. So we are still quite optimistic that this rally would actually continue at least till the end of the year, given the current macroeconomic constraints in the
Situation that you
country
saw.
and barring any other
Last minute stuff that we
externalities.
might any last minute shenanigans that could happen.
Yeah.
Well, we actually hope not. And aside the usual stock, what other things should one be? Well, let me use the right term. What other securities, that's the right term to use, can complement stocks in one's portfolio? So, like I said, we're always looking to diversify. So, what should we be putting up in our portfolio to make it bulky, to make it rich?
Yeah, so it's quite important for you to have a well diversified portfolio.
Right,
So you could have some possibly in fixed income instruments. So currently, especially if you have a USD fund, we currently have a USD mutual fund
right.
um, that offers very attractive rates, right? And it's
Okay.
currently doing very well. So you should definitely diversify. So be it in for if you're more of a short-term investor, that's between 6 months to a year. You put
Right.
some money in in NT bills or commercial papers,
Okay.
right? Then if you're a long-term investor, you're thinking of, okay, maybe I want to leave an inheritance for my children in instruments, do a corporate bond,
Okay.
but as well or a government bond, case in point. But also do your research on these fixed income instruments, so you don't buy a junk bond or
Right.
you don't buy a Ghana bond. No, you can't say that online.
No, you can't see that.
I can't say that online.
Right. But yes,
Okay.
I catch your drift. I catch your drift indeed.
Yes.
Yes, you just want to have a balanced portfolio to know
Yes.
what works best for you. However, that's where your fund manager comes into play. It helps you figure out what's best at the right time and how you can make things work. Oh, it's been a fun time just having this conversation. had a lot of laughs in between, by the way, if I'm being honest. Thank you so much, Oluwayemisi, for all that insight. So how can Lagos reach out to you to diversify the economy, their portfolio rather, and just get a sense of all this jargon sometimes that feels like it's not making sense to them? How can they reach out to you and get all the insights?
Okay, you can reach out to us as a company. So you can go on to reach out to Vetiva as your fund manager. Just log on to www.vetiva.com. We
Mm-hmm.
also have a research portal, www.vetivaresearch.com. You get where you gain access to a lot of our reports. We release quarterly reports on a lot of companies as well as outlook reports. So if you want to feed your eyes on reports and our outlook on a lot of these banks, you just need to create a free account and you get access to a lot of our reports. And do hurry while it lasts, because it might not be free for a way too long. But right now you get a lot of our reports for free. Basically.
All right. All right.
Yes.
Thank you so much. Thank you so much. Lagos, now you know where to go. So all you need to do is search for Vetiva, and I'm sure that you get all the insights. By the way, where the searching is it? Instagram? What platforms are you looking at? X, Instagram, LinkedIn?
Yes.
Where
So
would?
we are also on Instagram. Just
Okay.
if you search on Instagram, search Vetiva, you see it pop up, right?
All
We are
right.
also on X, as well as TikTok currently.
Okay.
So yeah, so we're
Yeah,
forward.
you're everyone. You're for yes, for everybody who's looking to invest and looking to improve their portfolio, that's where you also want to figure out who your fund manager is. Do your research. Don't just say because you heard the fund manager is on smooth, you will not do your research. Please do your research. As always, here to share the insights. But that's how we draw a curtain today on personal finance. I've learned a lot. I'm sure you have as well. However, there's more coming through music wise and conversation to keep you company as you journey along. Without much ado, catch you on the other side, Lagos.
Your earnings, your spending.
It was like
Thank
an
you
hour.
so